Hey everyone, welcome to your Algo Lab. In our last episode, we explored optimizing long-term moving average crossover strategies using grid search. If you haven't seen it yet, we highly recommend checking it out. The links to the previous episodes are in the description below. Today, we're going to backtest the same strategy across all asset classes. If you like our channel, make sure to like, subscribe, and hit the bell icon to stay updated with our latest content. Without further ado, let's get started. For each asset class, we'll present the backtesting results in 3 steps: return, risk, and risk-adjusted return. Let's begin with our fixed income asset class. We focus on the 10-year government bond prices, excluding coupon income to avoid distorting the moving average calculations. We cover bonds from the US, Canada, Germany, France, Italy, UK, Japan, and Australia. To visually present the information, we'll concentrate on comparing the average value of each moving average pair to the benchmark average. Here, we present the average benchmark return across all bond prices alongside our average return for various moving average pairs. For example, the first cell shows the average results for the 10-40 moving average crossover across all 8 countries. We've highlighted the statistics that outperformed the benchmark in green and those that underperformed the benchmark in red. In terms of absolute return, long-term moving average crossovers do not perform well on bond prices. None of the strategies outperformed the benchmark. The range between the 10, 150 and 10, 200 moving average combinations seems to produce better results compared to other pairs. The wide underperformance is partly due to the extended period of decreasing interest rates, which has created a prolonged bull market with no significant bear markets. Consequently, the retracements are minor and can be seen as mere pullbacks within the bull market. This results in numerous false signals when bond prices pull back and then revert to the bullish trend. In terms of risk, the moving average crossover strategy effectively reduced the maximum drawdown, with all combinations outperforming the benchmark. Looking at risk-adjusted returns, we see that some of the pairs outperformed the buy and hold benchmark. The outperformance appears to be concentrated around the 10, 150 and 10, 200 moving average combinations. Shifting our focus to commodities, we've decided to use spot commodity prices. This approach is analogous to using stock index prices without accounting for dividends or bond prices without coupons. While the actual investment returns will differ, we'll delve into those details in future episodes. For now, our primary focus is on analysing the long-term trends of commodities and to avoid any distortion in our calculations. We classified commodities into several categories based on their distinct price behaviours. Agricultural commodities include sugar, soybeans, corn, and wheat. Industrial metals encompass copper and aluminum. Precious metals comprise gold and silver. Petroleum commodities include Brent crude oil, gasoline, and heating oil. To visually present the information, we'll concentrate on comparing the average value of each moving average pair to the benchmark average. Let's start with returns. 30% of the moving average crossover strategies outperformed in agricultural commodities. Here we seem to have 2 clusterings near 20, 60 and 50, 100. For industrial metals, 87% of the strategies outperformed, with clustering near the 30, 100 moving average pair. In precious metals, however, none of the strategies outperformed. In petroleum products, we have a 39% outperformance rate. Focusing on the risk aspect, we observe an overall reduction. In industrial metals, precious metals, and petroleum commodities, all combinations successfully reduced risk. For agricultural commodities, 74% of the combinations achieved a reduction in risk. Looking at risk-adjusted returns, industrial metals have a 96% outperformance rate, with clustering near the 40, 150 moving average combination. Petroleum products show a 70% outperformance rate, with clustering around 10, 40. Though this combination is close to the boundary of what we consider a long-term indicator and edges into medium-term territory. Agricultural commodities have an outperformance rate of 48%, with clustering around the 20-60 range. The worst performance is seen in precious metals, where only 9% outperformed the benchmark, with clustering favouring the 50-200 combination. For Forex and cryptocurrencies, each currency is treated as an asset. The US dollar value is represented by the dollar index, along with all major currency pairs against the dollar. Similar to other asset classes, we are using spot prices here. While roll costs do affect currency holding returns, we will take care of those details in future analyses. In today's video, we focus on long-term trends using spot prices. Again, to visually present the information, we'll concentrate on comparing the average value of each moving average pair to the benchmark average. As usual, we'll start with absolute returns. Overall, we observe outperformance compared to the buy and hold benchmark strategy. In the Forex market, the outperformance appears to cluster around the 30, 240, 200 moving average combinations. For cryptocurrencies, the clustering seems to be near the 20, 100 range. Next, we examine risk, noting an overall improvement across nearly all currency pairs and cryptocurrencies. When examining risk-adjusted returns, we see significant improvements. In the Forex market, outperformance tends to cluster around the 30-200 moving average combination. For cryptocurrencies, the clustering appears to be near the 20-100 range. Let's wrap it up. Over the past 3 episodes, we have backtested the long-term moving average crossover strategy and grid search optimization across nearly all asset classes. Here are a few key takeaways from our findings with a focus on the averages for each asset class. In terms of risk-adjusted returns, a significant number of combinations outperform the benchmark, indicating that the strategy is fundamentally sound. For each individual asset class, we will select combinations based on their performance within the risk-adjusted outperformance clusters. We believe the moving average crossover strategy is ready for deployment. Don't forget to check out our other videos. If you enjoy our content, please like, subscribe, and hit the bell icon to stay updated with our latest releases. Thank you for watching, and see you next time.